Winners and losers on Wall Street with our financial expert, Rob Black. And we're going to talk about just one company right now that's a winner and a loser, depending how you look at it, and that is Twitter with the big IPO tomorrow. So where do we start with this? Do we start with the numbers, their revenue and their losses? Do you look at that initially?
You do.
I do.
And that's part of the survey that's out, that only 19% of people think it's favorably, that they want the IPO. Facebook had a higher number of like 52%. The number one reason being cited is the loss of money, but let's not forget LinkedIn. Many companies have come public losing money. They have no cost of content. They get us to use their services for free, and you know, we talk about Breaking Bad. So AMC has to go spend the money on the actors, they have to go spend money on the TV show, and then we talk about it for free, and they can deliver advertisements. So that's the most compelling thing about all these social media companies. Facebook doesn't pay for content, LinkedIn doesn't pay for content, Twitter doesn't pay for content, so it scales very, very well to very fat margins.
Let's talk about the numbers. And Twitter lost $69 million in the first 6 months of the year, but they had $221 million in ad revenue. So they are bringing in a lot of money. They just seem to be spending a lot more than they're bringing in, and a lot of it seems to be on research and development.
Which is a good thing,
okay.
In my opinion. You want the company to be losing money at this point in time so that they have a story to tell over the next 2 to 3 years. Again, comparing them to Facebook and comparing them to LinkedIn, they're more similar to LinkedIn, and look what the stock has done for LinkedIn since they went public 2.5 years ago. It's been skyrocketing higher, hitting 52-week highs on a regular basis, up 300+% year over year. Now, Facebook was a little bit more mature. It doesn't have that scalability at this point in time. Facebook was already profitable. Another big difference between the two companies, and again, do I expect Twitter to be profitable by the end of the year? Not this year, but calendar year. Then I expect them to start firing people because they don't need all those engineers all the time. They have one big problem. They're not mainstream. You don't really use them. I love Twitter. To me, I do a radio show every morning that I'm able to find 60 headlines literally in 10 seconds and figure out which ones I like and I don't like. And it used to be go to 60 different websites or 60 different newspapers. So I see the opportunity. Their big problem is they're not mainstream.
Okay. I use Twitter and I like their new app. It's really great to get, I use all the news sources, but it's funny to see the news sources are 30, 40, 50 down as far as the top list. It's the celebrities that a lot of people are following on Twitter.
There is that. So I don't think the IPO is silly, and I do think it has a potential. Again, if the first trade, if price is at 28, if the first trade's at 50, it's crazy expensive. Don't chase it. If it comes in more like at 30, 35, I think you could nibble a little bit, wait a couple months, see if it goes lower, nibble a little bit more. I would scale into the position. I would not go all in. I just don't think that there's any reason for that. Again, this is a very risky name. I would not, put, your milk money or your mortgage money into this per se.
Good advice. Twitter debuting tomorrow on the New York Stock Exchange. And we'll be right back as the KRON 4 Morning News continues.